Ladies and gentlemen, good day, and welcome to the Rico Auto Industries Q3 FY23 earnings conference call hosted by Financial Technologies. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal Rico by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Vijay Gaichandani. Please go ahead, sir.
Thank you. Welcome to Rico Auto Industries Q3 FY23 earnings conference call. From the management, we have today Mr. Arvind Kapoor, Chairman, Chief Executive Officer and Managing Director, Mr. Kaushalendra Verma, Executive Director, Mr. R.K. Miglani, Executive Director, Mr. Rakesh Sharma, CFO, and Mr. B.N. Jam, Company Secretary. Now I request Mr. Arvind Kapoor to take us through the key remarks. After that, we can open the floor for the Q&A session. Thank you, and over to you.
Good evening. My name is Arvind Kapoor, and welcome you all to today's conference. The third quarter has been as per what we had expected, except one or two changes which came about because of mergers that had happened. I'll talk about that also. The third quarter normally, the month of December especially, is a little slow because most of the OEMs, they have a shutdown, and for a week or 10 days there is almost zero production. And also in the market, because of the model change in India, we regard the year as a model change from 2022 to 23. So people have a tendency of buying lesser vehicles at the end of the month. So that's the reason that most of the OEMs also shut down their plants. So by and large, it was as per expectations, and both in the domestic front as well as the export front. In the domestic front, now what we see for this particular quarter is that the two-wheeler is a little challenging, and we are hoping that it bounces back. And in the last meeting we had with the Finance Minister, Madam Sita Raman, we did request that two-wheeler is a common man's vehicle, and I think we requested that the GST should be brought down, which I don't think she's going to agree to well. But she says, I agree with you, but I don't know whether I'll be able to do it. So we are still pushing it, and through the ministry, through our ministry as well, we are trying to push that. And with that, we hope that the sales starts picking up. The export front, I had mentioned to you earlier that it had become a big challenge, and about a year back we were air freighting, etc., mainly because the shipment time that was being taken from India to the US as well as Europe, that had almost tripled. And in the case of US, there was total jam at the docks, and also the railways were not picking up the material there locally. So it had become a challenge, and so we had a lot of material on the sea so that we don't have to air freight any further. So we did push a lot of material, and now the situation is fairly normal, and the goods are reaching in time. And we have excess stock in in our warehouses, both in the US as well as in Europe. And so we have slowed down. We don't want excess inventories there in our warehouses, so we are stabilizing the inventory and bringing it back to whatever was normal. And so for this quarter, we will make less shipments, even though the pickup from our customers is as good as normal. In fact, in some cases, they have picked up a little more. In Europe, surprisingly, the market is still good, and despite the war zone. And the other problem that we faced was that euro had crashed, and so we did have a lot of issues as far as from 79, 78 rupees, it came down to about 70 rupees. And today it is again bounced back, and thank God for that. So that is one challenge that we did face in the last couple of quarters, and we're hoping that this would remain stable now, and there won't be any surprises that we would see. On the the results that we declared now, it is on the 5th of January this year, 23, that the NCLT gave us the order for merger of RCL to Rico Gen 5. And because of that, as the appointed date was 1st of April 21, we had to reinstate all the previous quarters. And that's why you see some changes that would have happened in the previous quarters. And that had to be done. Can we announce it? Can we announce it? Right? Okay, good. Oh, very good. Okay. I just got the news that apart from the first merger that I was just talking about, RCL to Rico Gen 5, that was cleared on the 5th of January. Just a couple of minutes back, the other merger that we were talking of RIL to Rico Investment, Rafa and Rasa with Rico Auto, that has also been cleared. That has just been cleared about half an hour back. And hopefully we'll get the order very soon now. So that's new news that we are sharing with you. You guys are the first guys we are actually sharing this news. And we were hoping that this would happen actually last month, but it didn't happen. But very happy about that. So because of the merger of RCL to Rico Gen 5, we had to reinstate all the previous quarters. And that has been done. If you look at the commodity prices, they are fairly stable. So you will also see that in the results that our material consumption has actually come down. Raw material consumption has come down, and we are hoping that this would remain in this bracket for a longer period, and that will help us. On the EBITDA front, we had assured you that we will be in the double digits. We have come into the early double digits, and you will see an improvement even in the next quarter, in the current quarter, and also the quarters that will come in the future. We had given a target to you all that that is what we internally want to achieve. We are very confident that we will achieve that. And yes, the other thing is that all the investments that we had been making in the past, all these, they were materialized, and the plants have the start of production has taken place in all the projects that that includes the Toyota, and Maruti, and even the other customers. All the projects are in place now, and we are in the process of ramping up, and so the capitalization has also started taking place. On the defense side, there are many projects that we have in hand that we are bidding for. The one project that we had mentioned to you earlier was fuses, and we have been fighting for it for the last almost 4 to 5 years. But there's a ray of hope. It is getting delayed and delayed. Now I think they are again going to call all of us for testing. That is the latest information that we have. And earlier we were told that they're going to ask the public sector undertakings to do it only. But since our protest, they have accepted the fact that they will also put us through the testing. So we are very happy on that, and we are confident that once that happens, we will fare much better than the other companies that have actually given their fuses. So very, very happy on that. Besides that, there are other projects which are going on with the Navy, with also the Army, and there are very, very interesting projects which are coming up, and we are participating in most of them now. On the manpower cost, the cost has gone up slightly, and that is partly because there was we have tried to replace the older people with the younger people, and so there was some cost in clearing the accounts of the people who were expensive and replaced by younger, smarter people. So we have done that, and that's the reason that was a one-time cost of 1.5 crores additional, which has happened in that. And in the finance cost also, there was an additional 1.5 crores, mainly because of this euro fluctuation, volatility. So there are 3 crores, which is an additional expense which we've incurred this time. Sales is as per what our expectation was, and we are hoping that this quarter also the sales will remain good. The car industry is doing very well. The commercial vehicles are doing well. The exports are doing well, and the off-road vehicles also well. The challenge is only the two-wheelers, and we are hoping that they will also start picking up. That's it for me. I think we can open up for questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and then one on their touch-tone telephone. If you wish to remove your question from the queue, you may press star and then two. Participants are requested to use their handsets while asking a question. Again, if you would like to ask a question, please press star and then one now. We will pause a moment while our question queue assembles. Thank you. The first question we have today is from Aman Vij from Astute Investment Management. Please go ahead.
Yeah, good afternoon, sir. My first question is on the export side. So, if you can give a rough breakup in terms of geography. Also, what was the sales growth in different geographies for Q3 as well as 9 months? And also, what kind of growth are we seeing for the next year? If you can talk about that on export side.
Just 1 minute. Well, the Americas and Europe, what would be the difference? See, between, if you split up US and Europe, it is almost 50-50, not exactly 50-50, but almost 50-50 in the export front.
And 9 months, sir, what was our number this year versus last year? And in Q3 also export, if you can talk.
You have the numbers of last year? Just a minute, let me try to pull out the information. This quarter, if you compare it to last year, it was 121 crores last year and last year quarter, and this year it is 125 crores for this quarter.
Sorry, how much? One?
Console बताएगा. Thank you. Console बताओ ना. 9 months. Okay, 9 months last year was 329 crores, and 9 months this year is 382 crores.
Sir, for Q3, what was the number? Last year was 121. This year, I couldn't get the number.
125.
Okay. So, the question was regarding this only. So, there was not much growth. H1 maybe we saw very good growth.
Let me there's another company that also exports, one of our subsidiaries. So, the final figure for the last year and this year is, last year was 333 crores, and this year 387 crores in consolidation.
Sure, sir. My question was related to Q3. There was not much growth that happened. If you can talk about the same.
Q3, you must realize that Europe is practically like September, you will have France, which is slow. October, then Germany goes on leave, and then they go on leave. October, November, they keep on going on leave. So that happens, and then the month of December in any case is slow because of the last few Christmas, etc., etc. So the overall pickup normally is less in the last quarter.
And so for Q4, what kind of growth are we expecting in exports as well as for the full year FY24 next year? What kind of exports number do you think we can reach?
I think next year we have given a target of, just a minute, we had mentioned the figure, just a minute. Next year we expect about 600 crores plus.
Okay, and Q4, are you seeing any uptick or it is still slow in export?
I mentioned to you that because of excessive stocks, we might be shipping less from India. And because we are trying to reduce our stocks there. But let's say we are pushing. Let's see what happens.
Sure, sir. My second set of questions are on the defense side. So it was good to hear that the Ministry of Defense has allowed the private players again to do the test. So, sir, when do you...
They had actually thrown out the private players, even though the tender was meant only for the private players.
Yeah, you had explained last time. Mm-hmm.
Yeah.
So wanted an update on the timing. So when is the trial expected to start and end? And are they expecting any orders this year?
This year, on the fuse front, not very certain because now they've agreed on the trials. And the trials take place both in the summer camps as well as in the winter areas. So that is where there's also where the desert is. So desert तो हो जाएगा, summer की तो हो जाएगी, but जो winter की है ना, वो थोड़ी आगे पीछे होगी. So how they're going to handle that? That is what we are questioning them also. And because of that, the whole thing gets delayed. But the army needs the fuses very urgently. That's the other side of it. And this is as far as the fuses are concerned. But besides this, we are expecting some other orders. There are some various shooting ranges, etc., that we are waiting for, and we are hoping that those will come through.
So for combined, do we expect any sales in defense segment in FY24, that is next year, or only in FY25 we'll see some sales?
थोड़ी बहुत sales होगी इस साल, but by and large will be next year only.
And next year you think 100, 200, 100 crore plus can be?
I'm not saying anything because till we have things in hand, we are not saying anything because army is very unpredictable. You know, things can get delayed and over delayed. The tender was supposed to come out almost 4 years back, and so it's only delayed by 4 years.
Sure, sir. Just one last clarification on this part. So, apart from army, doesn't other organizations like CRPF and Ministry of Defense, all those also have requirements for these fuses, or only army is the possible customer? So we can't.
No. We are talking of the Navy, Air Force, and the Army. We are talking all three. And of course, CRPF and others, those also, they have the requirement for these ranges and all. That also we are discussing. Also, Army ka naam aata hai mainly because of the fuses, but we are also talking about the fuses with the Navy.
Okay, but trial will be common for this Army, Navy, and all those things which will happen.
No, they all have their own independent trials.
Okay, but biggest order is expected from Army only whenever it comes.
Yes.
And if there is delay, can we start trying to sell to CRPF and any other organization apart from Army?
CRPF doesn't buy. It is only the Navy which buys their fuses. CRPF doesn't buy.
Okay, and Navy requirement will be, sir, how much compared to Army, like half, 1/4, or?
It is probably 1/3 of that. We were trying to see the ratios. It was about 1/3, 1/4 of the Army.
Sure, sir. These are the questions from my side. I'll get back in the.
But the value-wise, it might be more because their demand is a little tougher and the prices are more. So that we.
Okay, sir. That is good to hear. Thank you.
Thanks. Thank you.
Thank you. The next question we have is from Rico from ICICI Securities. Please go ahead.
Hello.
Yeah.
Yes, sir. Am I audible?
Yeah, absolutely.
Yeah. So thank you for the opportunity and congratulations for the great set of numbers. So firstly, my question is on our overall top line growth. So for FY23, when we talked last time, we were having targets of around 29% growth. So if I'll compare it from FY22 around 1,800 crores of revenue, so we were targeting around 2,400 crores of revenue for FY23 and roughly around 3,000 for FY24. So if I look till 9 months, it's just roughly around 1,700 crores of revenue. So it's possible for us to clock around 700 crores of revenue.
Well, see, the first time we had said 2,350 crores. That's what we had said. But subsequently, we did say 2,400 crores. And because we were trying to push our teams that we should market as much as we can. And that time we were also thinking that the two-wheeler industry will also pick up. So unfortunately, that is not picking up. And because we have all the capacity, no investments are required for the two-wheeler industry. If they double the production, we can start supplying double from the next day. Anyway, we are still working on it. We are not giving up, but 24 still remains the target. But we'll be crossing 2,300 in any case. That's the minimum that we will be crossing.
Okay, and we'll be sticking to around 3,000 crore for FY20. So there's no change in that.
Yes, that is the target for next year. And we have the visibility to quite a large extent on that.
Okay. It's great to hear, sir. Secondly, sir, my question was on margin front. It's good to see around 300 basis points of raw material, gross margin expansion on a quarterly basis. So have all the commodity benefit have been recorded in this quarter, or still there is some effect pending or some compensation you have to receive from customers?
Now, these fluctuation in the commodity price is not very high now. Hoga thoda bahut hoga upar niche, that is on a daily basis. So they take the average of the 3 months and then they divide. So wo hoga, but it's very minor compared to whatever is happening currently.
Right. So basically, we are doing it to be around somewhere 70 to 71% RRM to sales portion going forward.
I didn't get you. Please repeat.
So we assume our raw material to sales ratio to remain in the range of 70 to 71%.
Yeah, around the same range. Yes.
Okay, so we are comfortable at achieving 10% plus margin going forward, right?
Yeah. No, our target is even more. In the next quarter, you'll see even better results.
Okay, so we'll be targeting around 11-12%, right?
Well, we'll do better than what we've done now.
Okay. And lastly, sir, my another question would be on content per vehicle. If you can share between what is our average content with respect to a two-wheeler and a PV, that would be great.
Okay. Come again, please.
Our content per...
To define content per vehicle, I'll tell you a reason for that. In some vehicles it would be 20%, in some places it will be 1%, 2%, 5%. It varies from vehicle to vehicle and model to model. So very difficult to define the vehicle content. Jo karta bhi define, I think they're making a mistake by defining it. It's not possible to define it.
Okay, sure.
We are supplying components to Maruti, and Maruti vehicles are about 5 lakhs, 7 lakhs, onwards 10 lakhs. Then we supply parts to BMW. Now, BMW vehicles are all crore and plus. So, I mean, how do we define what percentage of... so that becomes another challenge. Even though the parts are often double the price of the parts that we supply to Maruti and others. So it becomes very difficult to define that.
Right. Sure. Okay.
But we are focusing a lot on electric, and if you notice that the new orders that have come in is about 1,600 crores. And now it's a mix of electric as well as IC engines. Both are we're getting orders of both. We're not leaving either. Our focus is IC engine. Our focus is electrification and electric vehicles. But अगर IC engine का कोई order में हम छोड़ते नहीं है.
Right. Sir, lastly, can you share order book or any order wins for the Q3? So last till H1, our order book was around 1,350 crores. So is there an increase in that?
So but I just said that the order book now is 1,600 crores for the year.
So increasingly 250 crores for the current quarter order.
Yeah.
Okay, sir. Thank you for the opportunity. That would be all from me.
Thank you. The next question we have is from Utan Gopani from Capri Global. Please go ahead.
Hello.
Yes.
Hi, sir. Good afternoon, and thank you for the opportunity. I would have a few questions. Firstly, if you could help me understand, you said that exports for the quarter were at broadly similar levels as the last year same quarter. So if you can help me understand that, is it primarily inventory which is causing this impact? Because we have been sort of expecting that the export business is on a strong trajectory and that you won new orders. So what exactly is driving a YOY slower growth in the export business? And in that context, for FY23, what is your expectation now for the export business?
The last quarter in any case for export is always on the lower side, if you look at the averages of the
But
last.
actually, I'm just comparing it YOY, so I'm assuming that the seasonalities exist in both the periods. So I'm just trying to understand in that context, what is driving this slower growth.
The last quarter in any case is a little slow, but we are also adjusting for the inventory. That is surely there because we had almost 3 months of stock in transit and also in our warehouses. And so we were trying to reduce that because we are required to maintain 1 month stock there. And so we had almost 3, in some cases 4 months of stock which is in transit. And so we want to cut down that absolutely. Couple of reasons. One is that when it's lying in the warehouse, the iron parts after 4-5 months, there's a tendency of catching rust. So we don't like any rejection, any rework to be done there in the warehouses there. So for that reason, that is one reason. Then aluminium can pick up white rust. That is the other phenomenon that is there. Even though our packing is good for 6 months, but that possibility always there. It depends on how much time it spends on the sea. That plays a very important role. And so that is one. And then number two, why do we need to pay extra for warehousing costs? For 1 month it is okay. We have settled, but beyond that we pay extra. And so we wanted to reduce the cost there also. And so this is what is happening. This is one reason. But month of October, November, December is always on the lower side every year.
So has this adjustment to a 1 month inventory period been achieved in exports in the quarter 3 numbers?
No. We keep on running up plants to a lower level of production, and we keep on shipping also, but we are shipping lesser than before. And we are hoping by March end we'll be able to adjust most of the inventory.
Okay. So basically,
I tell you what happened. We ship both iron components and aluminum components. Now, if at all there's a shortage of any component, and if the goods are lying at sea and we are unable to deliver to the customer, we are required to airlift. So the choice was that. So what we did was we took the priority on the iron component. We started pumping more of the components and onto the containers and sea, so that they get there in time because they are almost 3 to 4 times the weight of the aluminum component. If we are required to airlift, or rather airlift aluminum component than the iron component. So that is one focus that we had. So iron component we actually had for 4 months stock there. So that we are depleting now. The aluminum was 3 months, but we will deplete that also.
Okay. So for FY23 now, FY22 we did about 455 crores of exports. What is the number that you expect for this year now and for next year?
We've already done about 408. We are really close to 400 crores. And so this quarter also, I think that there would be it will be 500 plus, yeah. And next year we are expecting 600 plus.
So next year you're targeting about 600 crores now on the export business.
Yeah, 600 plus export.
Got it. So next question I have is on the contribution of all the key segments in terms of two-wheeler, four-wheeler. What was this contribution in this quarter and how has that grown, each of these segments?
Compared to industry growth, the two-wheeler, The two-wheelers around 31%.
33.
31 plus, if you take everything, it comes to about 33%. The 51% is in four-wheelers, that is the cars, autos. Commercial vehicles is about 10%, and others is about 6%. That's off-road vehicles, etc.
Got it. And can you share either the growth or the similar percentage in the same quarter last year?
I can send it to you. We can do that.
Okay, that is helpful. And how much would have been the EV contribution in this quarter?
Beg your pardon? EV contribution.
The sales which have come from.
It would be 12% plus. And next year, we should be around 17% next year. And like I mentioned earlier, we are very close to getting another very, very large order, and hopefully by the next time, March is the date. March is the deciding date, and we are betting very aggressively on that. So hopefully the next quarter we might be able to tell you something.
Got it. If you could also update about the scale-up that we have been able to achieve with Toyota, and what is the outlook for that business next year?
Toyota is very good because, in fact, they are ramping up whatever capacities they had asked us to put. We did put up those capacities, and then they wanted us to increase it by another 50%. And the feeler we are getting is that they want even more capacities on that. And what we are trying to do is trying to accommodate most of the capacities in the current machines, the investment that have been done, with minimal investment that would be required to be done. So we're looking at that. We are working on that possibility so that we are able to achieve that. And Toyota is going full scale, and we were asking them as to why don't they jack up these capacities earlier, and why are they delaying it? So they said that they have a problem with the magnets which are imported either from Japan and or from China. And getting delivery of those, जितनी delivery मिलती है उस हिसाब से वो they are ramping up. So that is the challenge they are facing. So and one or two other components the challenge they are facing which comes from Japan. So we are ready to blast out, but they are having issues with that. The demand for their is huge, and because they could start using it for both for Maruti vehicles as well. And so it's a very. We are hoping that they are able to solve the issue.
Got it, sir. Sir, and lastly, in terms of the operating performance, so in this quarter, while the revenue did come down Q on Q because of the seasonality, you were still able to deliver double-digit margins. So and gross margins have also improved nicely. So if you could help understand that now going into Q4. While you're expecting commodities to remain same and the leverage because of revenues being higher, can you actually deliver 12% plus kind of EBITDA margins, or are there any factors which could have some neutralizing impact on the margins as well, which I'm missing?
Yeah, our internal target is more than 12%, but not for this year. But that is what our internal target is, and we did mention that in one of the conferences that our internal target is above 12%. And we hope that we're going to keep it in this quarter, but I don't know. But we are assuring you that we will be in the double digits and better than the results we declared today.
Okay, sir. Thank you so much. I'll go back into queue. Thank you.
Thank you.
One other point I'd like to make here is that we made one item clutch for two-wheelers, and earlier we were selling mainly to Hero. But now we do sell to the aftermarket as well. And we are negotiating with all the other two-wheeler makers in India. And we are hoping to get a share of the business from there. It's a cycle. And as this item starts coming in, our margins start improving automatically. We'll go further up, even in the two-wheeler industry, despite the challenges of two-wheeler industry.
Thank you, sir. The next question we have is from Aditya Sen from Robo Capital. Please go ahead.
Hi, sir. Good evening. I'm already glad that most of the things that they are doing is already in line with our estimates. and our guidance, except for the two-wheeler and the Euro part. I just wanted to know if the margins upcoming defense segment is going to be something different than what we are already doing now, that is the range of 9 to 12%. Is it going to be something different from this?
The defense is always much better than the commodities of the auto industry. Auto industry components are known as commodities.
Right.
So the defense is always much better, much better. There's very little comparison.
Okay, so any ballpark figure, like in what range would it lie? 10 to 15, 15, 20?
I mean, I can't really commit here.
I understand it's too early to give such guidance, but I just wanted to know this because we already don't have any order book figure, so we won't be able to figure out anything.
When we quoted, we kept a margin of almost 22-23%, to be honest there. And then there was a fluctuation in the price of steel. The margins actually came down. And now the steel has gone back. And so, I mean, we are again back to that same level that we are talking of. So when we quote, it's 20, there are 7-8 items in that. So somewhere at 25%, somewhere at 22%, somewhere at 28%. So it depends.
Right. Okay. So that's what I wanted to know. Thanks a lot.
Yeah. And okay, in some of the traded items, we keep a flat 10 to 15%. That's the other thing, which we just trade, pass it on.
Okay. Yeah.
Thank you. Ladies and gentlemen, just a reminder, if you would like to ask a question, please press star and then 1 now. The next question we have is from Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes.
Yeah, thank you very much, sir, for the opportunity. Sir, I just wanted to understand first up, now in terms of margins, I mean, you said that quarter on quarter we should see margin improvement, right? So I think earlier we had quantified, I think, in the range of 50 to 100 basis point increase in margin on a quarter on quarter basis. So how do we see that as we speak now?
No. I don't remember really defining that every quarter you see 50 to 100 basis point, but that every quarter you see an improvement, and we'll be touching double digits by the year end. But we are happy to do it now, despite the sale being lesser than the previous quarter. And this current quarter would be even better than that. And next onwards, you will see further improvements taking place. So there are a lot of things that we've taken up that has been done here. To give you one simple example, we've I'm getting a little technical now. In the casting area, in the iron casting area, we had yields of up to 45%, 50%. We've been able to improve them to 65%, even 70% in some cases. So that itself impacts the margins a lot and also frees up a lot of capacities. So we are doing a similar thing both in the aluminum side and as well as the iron side. So all this is happening.
Okay, understood. So I mean, what sort of, 12% margin or 12-13% margin next year, is that a fair number to work with? I mean, FY24?
But I don't want to make any announcement now, and so I will. But I will rather surprise you and you'll be happy on that.
Okay, understood. And when you're talking about these margins, are you including other income as well, or is it excluding other income? I mean,
excluding other income is 10.2 and including is 10.4.
Correct, but because this quarter I think our other income was on the lower side. Otherwise, other income have a sensitivity of 1%.
Yeah, that was because of the adjustments because of merger. So this is only reinstatement impact. So other income and other costs remain almost the same as we declared last time. So because of the reinstatement, some adjustments are there. So that is why you are saying.
And let me tell you, the other income is going to come down further because the further mergers which are taking place, which are just announced, that would also reduce the other income.
Yes.
Okay, because of the merger now my other income will come down. I mean, currently it was about 1.5 crores. So it will be less than 1 crore going forward.
But no, it will remain in this range because it will already reduced because of the one of the mergers.
One merger, but now the further mergers.
Yes.
You're talking about.
Yeah.
And the other thing is that the profitability of the other companies will also start merging into this company.
Okay, understood. So is that the reason our depreciation and interest also is on the higher note on a quarter-on-quarter basis?
You are absolutely right. If you see our numbers, those were published in Q2 or H1. Those numbers have been reinstated, and that is showing a huge difference in finance cost. And you see that is reflecting in other income also. So both sides it has been adjusted. So that is what I was referring to. So it is because of that reason. As far as depreciation is concerned, that is mainly on account of capitalization of all our projects that is during later part of Q2 and during Q3 also. So depreciation is on that account mainly, and finance cost is just an adjustment.
But going forward, is that the range you are working with? I mean, in terms of depreciation and interest?
In terms of depreciation, yes, that is the range. Okay. And in terms of interest, it should be in the same range. But here, 1.5 crores is one-time cost only. That is on account of euro volatility that has happened. So some reduction in interest cost can be there in Q4 as compared to Q3, but it will remain almost the same.
So 1.5 crores volatility maybe. So currently it was around 15 crores. So maybe 13-14 crores might be a good range to work with.
That is under the expectation that probably RBI will start reducing also, because during past few quarters, RBI has increased at least 5 times the repo rate to the tune of 225-250 bips. So that has impacted our interest cost. So once it starts coming down, our interest cost will come down definitely. But otherwise, you should expect it in the same range.
Fair enough, I understood. And my final question is on tax. I mean, how do we see the tax rate?
Yeah, tax rate currently applicable on us is, it comes to around 34.5%.
Correct.
But what is going to happen is that this also you will see after merger, these also improving on the account of, because there are a lot of deferred tax liabilities we have taken, which I think after merger will get reduced. So that will have a positive impact on us. And apart from that, it will take around 2.5 years time to recover all our MAT credits, etc. Those are lying to our credit. So once we utilize those credits, then we will adopt the new regime of 25%. So there is going to be a reduction in tax cost.
Okay, so effective tax rate for next 2.5 years will be in that range only. I mean, it
will be in 34% range. But there is going to be a lot of adjustments in deferred tax. So actual interest rate will keep coming down next quarter onwards, and ultimately we will end up paying only 25%.
Yeah. So cash outflow will be in the range of 25% only.
Absolutely. So cash outflow is not there at present also. It is at a lower side only because we are adjusting a lot of
deferred tax. You're adjusting a lot of deferred tax.
Correct.
After 2 to 2.5 years, when your entire deferred tax is being utilized, then you will move on to the next, the new regime where your effective tax rate will be 20%.
We are just waiting for that. So we won't pay more than 25%. The current rate.
That's 2.5.
Yes.
Okay, fair enough, sir. I think, that's it from my side. All the very best, sir. Thank you so much.
Thank you.
Thank you. The next question we have is from Pritesh Chheda from Lucky Investment Managers. Please go ahead.
So tax rate including the deferred will be 25%?
Yes, once we adopt the new scheme.
So it is 22% right now.
Now on the balance sheet, if you see, it is 34% around that range. It will remain like that. But that is not the actual cash outflow that is going in. If you see our cash flow, there is very less amount of tax as compared to what is appearing in the P&L account because of the deferred tax liability.
So what should be the including deferred tax liability tax rate next year?
Ultimately, it should be in the range of 25%. Because once we utilize all our credits, we will adopt
next year what it should be, sir? It should be 30, 25.
in P&L, it will be in the range of 34% only at the current rate.
Okay.
For next
My second question is that Toyota, how much from the new plant have we supplied from this quarter?
Toyota
New plant.
So around 40.
40, yes. 40 crores in one quarter. 40 crores. 40 crores.
So it's about 40 crores this quarter, and it's going up every month.
So basically, out of 200 crores of order that we got, we have already started supplying 40 crores per quarter, right? 200 annual, and we have started supplying 40.
Yeah.
Okay. You mentioned that interest had a 3 crore one time, right?
No.
In your initial comment.
1.5 crores, that is on account of euro volatility that we had to put down to bring it on MTM. The other portion that you had, the adjustment that we said because of the merger, there is accounting adjustments those are reflecting if you compare it with the previous quarter.
Okay. Then on your 2,400 crore quarter annual number, or 2,350 or 24, whatever you want to mention, there was a 15-day plant shutdown for a lot of OEs this quarter. Yes. So that itself means 14-15% growth QOQ. If there's a normal quarter next quarter. So based on that, we actually head towards 630, 640, and we have this Toyota ramp up to happen. So it's largely comfortable to reach 2,300, 2,350 plus number. Is this
23 plus 100%.
Okay. And if you are doing a 10% margin at a 550 crore revenue, you'll obviously do a better margin when you do a 650 crore revenue, right?
As the revenue goes up, you'll see the margin improving also, and but also the cuts that we are making in our system and the efficiency levels improvement that are happening here.
Okay. Next on the, just like Toyota, we have got incremental orders from BMW, which will help you register the growth in your exports next year. What is the progress on those BMW incremental orders in terms of?
One, we had already got and announced in the last meeting also. That is almost 100 crores a year. That we've already got. That's for the electric vehicle. And it's the other 4-5 components which are on the pipeline, and the teams are here for audit. That audit was excellent, and so by March they would make a decision.
So at least those 100 crore incremental order is what you are building in your revenue number, export revenue number, moving from 500 to 600?
No, that comes the year after that. That gets in a year after that.
So BMW orders, the export comes year after that.
We have not factored that into the next year's export.
Okay. So existing customer and existing product line is where you have to build in this 20% growth for exports next year.
Existing customers, and there are some new orders from other customers besides BMW. Electric vehicle. And the electric vehicle ramp up. That's the other thing that's happening.
That's not BMW. That's other than BMW, right?
No. One more. We are already supplying electric vehicle components to BMW and PSA and Renault. We are supplying to all three of them. So the ramp up is taking place in PSA as well as BMW, and Northern is not electric. No, it's electric. And so that ramp up is already taking place in those supplies. When I am talking of the next orders, those are the Gen 6, next generation of components that are going to be developed, and for that what we are bidding, for which we've already got one order.
Okay. And when you supply to a new model or a new platform, just like the Toyota which you started supplying, and there's an incremental business to be built on, ideally the margins should be better in these orders, right, versus your existing product line?
Oh, absolutely. The new products are always better margin than the older one.
Okay. And lastly, sir, you mentioned, I understood on the interest cost instead of 15, it should be a number closer to whatever, 13 and a half. The depreciation number at 29 and a half, you have already capitalized your entire CWIP, or is there anything to be left to be capitalized in CWIP?
Whatever is there, they've been done, but it's only any new balancing equipment that come in which would be done again.
Sorry, what is new?
any balancing equipment that would become some inspection equipment or some washing equipment, etc., etc.
So when you do not have a large capex plan over the next 2 years, and all your capex is maintenance of 50 crores, 60 crores that you mentioned in the past quarter, we can safely annualize this 30 crore quarterly run rate as your depreciation number for next year?
Yes, yeah, yes.
Yes, right. So you will be in a situation where your top line will grow 20%, your margin will expand, and you have a similar interest and depreciation number.
Yes.
With a 34% tax rate.
Yeah, that's right.
And the P&L.
Oh, at the P&L. Sir, my last question is, we don't make much number on the casting side, the ferrous casting, which is 20% of our business. We don't make any EBIT.
It's less than 15% now.
And ferrous components also are machined.
Iron.
So do we make any EBITDAs on ferrous business where the capacity utilization is less, or it's a zero EBITDA?
We've been able to free the capacity by improving the yield. That's what I just mentioned.
So are you making any EBITDA percentage, EBITDA, positive EBITDA there, or you're not making on the ferrous business?
Ferrous side is a challenge, but now with this new efficiencies that we got with the yield, there's a tremendous change that's coming there.
So those zero EBITDAs will move higher, right, on the ferrous casting? That's what you're mentioning, via the yield?
Certainly. Oh, yes, yield makes a lot of difference. There's an improvement of almost 50% in the yield that we were using earlier. From 40, we got to 60 plus.
So has it slowed down in your quarter 3 number, or it will slow in your incremental numbers?
See, the number of patterns to be done by over 20 sets of patterns. So we've been able to do, I think, about 7, 8 of them already, and every week there's a new pattern which is being introduced. So it's a process.
And lastly, what will be your debt repayment next year?
It is in the range of 100 crores, 90 to 100.
Will we see any debt repayment this year in FY23?
Yes, this year also it is around 90 crores we have to repay. Out of that, 70 crores have already been repaid during these 3 quarters.
So this interest cost is after the repayment. So your debt number has come down, and yet the interest cost has gone up, right?
No, debt number has not really come down as of now. It will start coming down after about 1 year or so from now. So
no, you said, no, sir, there is a debt repayment of 100 crores this year, and there's a debt repayment of 100 crores next year.
No, but there is fresh debt also that we have to arrange for these whatever capex has happened, and for operations also working capital needs is going up. So because of that reason, as of now, the debt levels remain at almost the same level.
Same level.
And yes. And
so we will see the net. So we will see the actual debt repayment next year.
Yeah.
Yes.
So then this.
I think it will start coming down after a year or so. Means after 4 quarters.
So your debt repayment will come after 4 quarters. But now you do not have any capex next year, sir. You do not have a capex next year.
No, we don't have. No major. Yeah.
So still there won't be any debt repayment in FY24?
No, because of the working capital needs. Because
the working capital, as our exports go up, you must realize that we get a payment after 120 days. And this is 30 days of shipment, 30 days of stock, and 30 days after that the payment comes in 10, 15 days delay. So it's almost 110 days we factor in when we do our export costing. And so that payment comes. So as the exports go up, our working capital requirement also goes up, but we are trying to get that funded also from BMW directly. And we've been successful with one of the companies, which one is it? US, GKN. And but we are attempting to do that so that our total debt comes down.
Thank you, sir. The next question we have is from Mukesh Modi from Modi Fincare. Please go ahead.
Yeah, good afternoon, sir. Congratulations for the reasonable set of numbers. My most of the questions have been asked about the export and interest and depreciation. There are a couple of them which are left is, suppose Gen 5, How much we have reached for 4 million capacity? So what is the capacity utilization in Gen 5 and electronics?
The total capacity in Rico Gen 5 is 4.5 million.
Okay.
And at the moment we are at about 2.3 million at the moment, and this year we'll be further increasing the capacity because we started talking to all the customers now. Earlier we were with Bajaj and Hero. Now we're adding on Honda and the scooters also. Yeah, we are in that also. So overall, you see the capacity going up.
By FY24, what shall we reach around 3.5?
Target the 3.5 to पहुंचना चाहिए. I mean, definitely पहुंचेंगे वहाँ पर. Because the volume game, the more we produce, the better the profitability.
Correct. And sir, what about Rico Flutronics?
Flutronics, in fact, they have last year the turnover was last year. We did around 65, and this year it will be 130. Yeah. So last year the turnover was about 65 crores, and this year they'll do about 135. And next year again there'll be an improvement, and because these are the new orders we got from Maruti, and we started executing those.
And both of them are EBITDA positive, right, sir?
Beg your pardon?
Both these companies are EBITDA positive.
Yes. Yeah.
And capex you said is around the maintenance capex 50 crore for next year, huh?
Yeah.
Only around 50 crores, huh?
Yeah, about 50, 60 plus one is the 40 crores.
And sir, any news on land monetization?
Now the market is improving and Gurgaon is also improving, and so we started talking to people.
Mm-hmm.
Let's see what happens, because we are ready.
Okay, but that can reduce our debt considerably.
That will eliminate our debt, not reduce.
I think that's it on the line. I don't have much to ask for. It's already been asked. Everything has been asked. Thank you very much, and wish you all the best, sir.
Thank you so much.
Thank you. The next question we have is from Anand Agarwal from Balaji Cap Investment. Please go ahead.
Yeah. Am I audible?
Yes.
Yeah. So first of all, thank you. Congratulations for the wonderful set of numbers. Most of the questions are already answered. Just one thing I just want to know: what is the 2 or 3 year plan the company has set aside in terms of the revenue and the margins? You have already mentioned that you will be in double digits margins. So let's say by 25 or 26, 27, what is the view of the management?
See, we would like to grow by minimum, our internal thing is that we should grow minimum by 15% year on year. And but this year, of course, we are growing higher than 15%, maybe around 28 to 25 plus. And next year also, I think that even though 15% was the internal target, we'll grow more than that. And the year after that, again, 15% is what we factored at the moment. And that's what we are doing.
So can we assume that 20%?
We'll surprise you. We'll do much better than that.
So would it be fair to assume that, not 25 as you have grown this year 25, so would it be fair to understand that 20% is the fair enough number?
देखो 15% हम कमिट कर रहे हैं, बाकी मतलब our target है कि 25 ही करें हर साल.
अच्छा, that's very nice.
Yeah.
So thank you so much. That's it, and congratulations for the good set of numbers, and best of all for the future growth.
Thank you so much.
Thank you. The last question we have comes from Mr. Raj Nawada from Zapata Investments. Please go ahead.
Hello, sir. Good evening. Sir, I just had one question on the defense side. I just wanted to understand that what all products we do on the defense side apart from fuses.
See, one is the fuses, of course, and then one is the firing ranges that I mentioned, and then there's an automatic system for the tanks that we are bidding for. These are some of the things that we are very actively involved at the moment. And
so what would be the revenue contribution from the defense, sir? last year and these 9 months?
नहीं, अभी तो बहुत कम है, अभी तो it's very minimal. But defense is such a challenging, requires so much patience, and many times we had given it 7 years to 7-8 साल लगे before we really penetrate into the defense. And now since we have been on it for that many years, now we are getting more and more confident of the penetration into defense and Navy and other the paramilitary forces. So we are working on all of them, and there are climbers and there are various other projects which are there, and so I think we'll give you some good news soon.
So do you have any target percentage in mind that defense revenue should come from?
I didn't understand. Please repeat.
Sir, any target percentage of your revenue, let's say 3 years down the line or 4 years down the line, you are targeting at least 20%, 10% of our revenue from defense. Do you have any such targets in mind right now, or it is too early to say?
देखो defense का it's too early to really decide. अगर fuel का हो गया, that will be almost 20% of our turnover. अगर बाकी चीजें हो जाएंगी, मतलब will be 10. That depends when they actually start releasing orders.
But in growth numbers, we have not factored in.
We have not factored any defense in the growth numbers.
So whatever will come, that is a bonus for us.
That will be bonus, yeah.
Okay, thank you, sir, and all the best.
Thank you.
Thank you. There are no further questions at this moment in time. I would now like to hand the conference back over to the management team for any closing comments. Sir?
Thank you so much for today's for hearing us today, and we hope to give you even better results the next time. And I was happy to announce the NCLT, the new merger that has been approved just today itself, and I think that will also help to improve some of our numbers. And we are hoping that we'll give you better and better results in every quarter. You see a change every quarter.
These all are 100%.
Yeah, these are all 100% subsidiaries of Rico, which will start merging into Rico. That will happen now. And subsequently, we are looking at the possibility of merging all the auto components into one, but that's a later on date. Thank you so much, and hope to see you soon.
Thank you, sir. Ladies and gentlemen, that then concludes today's conference. On behalf of FY23 Technologies, thank you for joining us, and you may now disconnect your lines.
Thank you.